All right. Hello, everyone. Welcome back to a very popular guest in return of Matt Smith as well, coming back to help me interview Drew Dickson, who we interviewed, I think, exactly a year ago to talk about the Tesla bull versus bear case. And Drew has been a longtime skeptic of Tesla and a bear at times. And, maybe he's even been a bull at times recently. Who knows? But I think right now he's still a bit skeptical at the current valuation of 600 billion, something like that, as we're recording this. But Drew, you were very right last year based on the demand. I think I re-listened to our interview from a year ago, and the demand was a big topic you brought up. And Matt and I, we had our reservations about demand as well to some degree, but you had a big skepticism about demand. Like, it can't always be forever, demand, no matter how many they produce. And you were, I'd like to congratulate you on being at least somewhat right on the demand falling off at those prices that were much higher than they are now. I mean, I think a lot of Tesla bulls refuse to acknowledge that supply and demand is a function of price, and they think, oh, they could sell every car they can make. Yeah, of course, if they keep lowering prices, right? But at the prices that the Tesla was at a year ago, there's clearly not the demand to sell the amount they produce, the supply they're producing now. So they had to lower prices. So I congratulate you, Drew, on that.
Well, I don't want to take a pat on the back for that. It just, to me, it was just commercial realities of the auto business. And as I think I said last year, and it was, guys, it was almost precisely 1 year ago today. I think we spoke on the 26th of May. So we'll have to make this an annual habit.
Yeah.
The thing I emphasized last year, just for your followers, your listeners, and from my friends and folks that are interested in my investment process, mine is not an anti Tesla view, spelled TESLA, not spelled #TSLA. I'm constantly just wondering what the share price is reflecting, and is it moving for the right or wrong reasons in one direction or the other. I do have a fundamental view that automaking is a lot trickier, a lot more cyclical, a lot more macro than a lot of Tesla fans have believed. Maybe some have changed their mind in light of what happened in the first quarter. But the competition is tough. And these are not slouches that Tesla is competing against, as much as everyone likes to say Toyota is a slouch because they're not moving into BEV quick enough, or Volkswagen or Mercedes or Ford or GM. These guys have been competing with each other for a century, through world wars and energy crises, and they're not idiots, and they've been in the trenches. Now, what Tesla is doing as a company is reinvigorating the competition. It's incredible, and I've told you this before. I'm not an Elon Musk hater like some of my brethren. I wouldn't call Teslac my brethren, but some very smart guys in my view. Jim Chanos is no slouch. Chris Bloomstrand is no slouch. These are friends of mine, but they have a very strong view about Elon himself and his corporate governance, his character. And I have purposely tried not to make that a big focus of my attention, because what interests me more is Tesla, the company, Tesla, the share price. And I think that no matter what happens, so we can talk about what's going to happen, but in 10 years, 15 years, maybe less, we're going to look back on Tesla and we're going to say this is one of the greatest stories in the history of capitalism, one of the best stories, one of the most interesting stories. Now, that could be the stock actually doing 15 million units and discovering for level 5 FSD and trading for $2 or $3 trillion, or it could be the stock settling off to a level where it's more of a competitor that's done a good job capturing share, but has not done any of the grandiose things many Tesla fans are hopeful of. I don't think the stock will be here. I'll say that. And so for me as a stock picker, yes, I care about the fundamentals a lot. I think that in the long term, those fundamentals are what matter. But we do get periods in intermediate terms where the share price will sell off too hard or for the wrong reasons. It might sell off, it may ramp up too quickly for the wrong reasons. Those are when I get interested. So as I think, now I do not have a position in Tesla now. I didn't have a position in the stock most of last year. But I think, Emmett, Matt, you both know I've written a couple of op-eds this year about Tesla. And the first one shocked a lot of people. It was in early January where I basically said, hey, it's not crazy anymore, the share price. It had gone down to $104 or something. And even if you have a long-term view that eventually Tesla might be worth something like that or less, which many Tesla bears have, it was too much too fast, and it was without a fundamental justification, and it felt more flow driven. It felt more, like anger toward him buying Twitter and nervousness about offending the typical Tesla consumer. And everyone just was piling on the stock as if it was on its way to zero, and it was too much too fast. I wrote this piece, which was a surprise to people, maybe even surprised you, Emmet or Matt, that Drew wasn't being so bearish on Tesla. And I read it myself after I published it. I was like, shoot, I'm buying some stock. Let's be objective here. I want to be objective. And I did. And as you guys know, it doubled in the next 3 or 4 months. And I trimmed my position on the way up. I got short. I stated that when I wrote that piece in whatever that was. When was that last piece I did? That was on, I can't even find the date, guys, May 5th. And we should talk about this. We should talk about what I was nervous about and what we were nervous about. And I think, Emmett, I did give you and Gary, Matt, I'm sorry I didn't include you in that group. I should have. It would have been better.
For shame.
Yeah, terrible. But I did include both Gary and Emmett in my op-ed. It was in the Financial Times saying, here's some guys that like Tesla. They're believers, but they also are reasonable, and they too were nervous about volumes, or they too were nervous about demand, and they too were nervous about gross margins, and they too did not think that they were going to print the 21% or 20 or 22 that much of Tesla believed was possible despite the price cuts in gross margins. By the way, it was interesting. I got lambasted by Tesla-y guys. Why are you talking about these crazies? I'm like, God, guys, please. It's everywhere. It's people are just upset on both sides. It's yeah. Sometimes I think I've told you, Matt. Sometimes I'll post something which I think is interesting. I did a tweet about the likelihood of getting to 10 million or let alone 20 million units ever. I think I have a really reasonable approach to it, and I think I know how it could be wrong. I'm gonna put it on Twitter just to sort of try to. My goal is to awaken people. Honestly, it's if I'm right about Tesla, the share price being too high, maybe I can convince a few people to pocket some of those wonderful gains from buying the stock in 2015. Or I'm wrong, and I can speak to you and Emmett and Gary and others and learn why this is a game changer, why it is that it is more like, which I've argued strenuously as, but maybe it does turn out to be a iPhone versus BlackBerry and Nokia argument, which I don't think is right. But if it is, I want to be objective and see it coming. I want to talk to smart bears, learn, be civil about things, and that's how we all get better at this game. And I have admitted, and I wrote in the FT column, hey, here's where I'm going to be wrong. Here's where I'm going to be wrong if these things happen. And I still feel I still know what numbers they need to print for me to say, oh boy, I messed that up. It's time for me to switch around. I'm not short anymore, by the way. I've covered my short. I how the stock behaved, at least those first few weeks after the first quarter print, made sense to me. The last 3 weeks haven't. I'm not sure why the stock's gone from 160 to 190, and maybe it's back down a bit. But and interestingly, it coincided with Nvidia's crazy move and growth outperforming value. And as we talked about before, sometimes Tesla gets caught up, good or bad, in these flows when there's just money coming into certain themes or certain factors, and it catches a lot of that. And that can take the stock higher, which might be unwarranted. They can take the stock down to $100, which it did in January, which I thought was unwarranted. So,
yeah, there's a lot to unpack there, Drew. But I think one of the really interesting things that you've done really well, listening to the interview from last year, and just you would say throughout the interview, here's what would have to happen for my thesis to be wrong. And I think for all of us as investors, that's something we should be internalizing. But a lot of times you say, hey, I don't think they're going to hit 20 million units. And people act like, you just, are trying to murder their baby or something. It's like people get like very viscerally defensive about it. And I think the goal of all this, like you said, should be to hone in where is our own thesis off, or at least potentially vulnerable to new data coming in and disproving some or all of it. And one of the areas I want to maybe start with, since it's been so relevant lately, is this issue of demand, which Emmet brought up. You rightly highlighted this as a cause for concern, but Emmet and I were also saying, I think the phrase one of us used was, we're waiting for the shoe to drop on demand, because at those elevated pricing levels, it just seemed like it would be hard to sustain in the longer term. And of course, that's demand really dried up in quite remarkable fashion, I would say, where they had to drop prices by 10 to 20% across the board. Are you surprised by either the magnitude of the drops? I mean, obviously a lot of this was macro. We're feeling this. Other automakers are feeling this too. But are you surprised by how precipitous the drop has been, or is this roughly what you were thinking at the time?
I'm not surprised by how precipitous it's been. I was surprised by the manner in which it happened. We first started seeing cuts overseas, price cuts, and then they came here. But to me, it was, I don't know, I'm sure it was well thought out, but if I would have done it, I would have made it one cut, almost globally, and I would have done it synchronously, as a signal. But when you're getting, hey, we're cutting in Germany, and we're cutting in China, and we're cutting in Europe, and now we're cutting in the US, and we're going to cut more in the US, and we're going to cut the Model 3. Oh, and then we're going to cut the Y. All of a sudden, I think it was just a barrage of news of discounting. It reeked of panic, honestly, but that's coming from a bearish stock price perspective, right? Not a bearish company perspective, a bearish stock price perspective. Like, well, the market's looking for this, it's looking for these gross margins. You had Zach on the call say, hey, yes, I know we've cut prices, but we're still going to print 20% gross margins. And you have all these Tesla fans saying, oh yeah, but the scale is going to be incredible, and we're not going to see any pressure because more cars will be pushed through. I'm thinking to myself, guys, that's not how any of this works. This is still a very capitally intensive business. And if you cut prices by 12.5% or 15 or 10, whatever the number was on average, it's very almost impossible to take your cost out that quickly, which means you're going to have severe gross margin pressure. And that was a lot of what my thesis was through the quarter. And that was evident. And I will say this, and I'm sure that the horde of Tesla acolytes are going to crush me for saying this, but again, I'm not anti-Elon Musk. I'm not like Jim or Chris. I don't have an axe to grind about his corporate governance, his share sales, his timing, his comments. You can make the argument that people like Jobs did the same thing. He just wasn't really as interested in those kinds of that precision as maybe the rest of us might be. I don't know the answer. I do think he's a genius. He's a polymath. I don't know how on earth someone can run 3 companies at the same time and change the world in all of them. You gotta take your hat off to him. But why on earth didn't they say, in the conference call after the first quarter was over, why didn't they say, and oh, by the way, these gross margins have been positively impacted by IRA, by IRA credits? It's something that they didn't even mention. It's almost like they're trying to obfuscate some of the truth about what happened to gross margins. And as I wrote in this FT piece, when you take out the regulatory credits, and then you learn in the 10Q that actually they won't even be specific about it, but they do admit that a portion of their gross margins were driven by IRA credits. But they didn't even want to say what it was. So then it left people like me or Gary or others to try to guess. Well, what's a portion? Is it 15% of the total profits? Is it 30? Is it 5? But the bottom line was that the gross margins for Tesla were even lower than the bad ones they reported. And back to what Emmet was driving at the beginning of the question, it is clearly, I think it's a demand business. And there is global demand for cars and light trucks. And that's a number that's actually pretty, I don't want to say consistent, but it's not impossible to model that one. Now, different folks have different estimates. For 2022, you have some people saying that there were 65 or 66 million cars sold. Some people say 85. Depends on how they define it. When I go in and I look at the actual companies themselves and I do a bottom-up build, that's where I get my number. And then that's where I get my estimates of how much of that is EV and how much it's going to grow. But as I've told you guys, I think that that Tesla's problem is it's not got enough models and they're not being refreshed often enough. And people care about that kind of stuff. People want differentiation. I'm convinced of it. People, if they want a Dodge Ram, they're going to spend $32,000 on a tradesman, or they're going to spend $100,000 on a TRX. If they want a 911, they can spend this, or they can spend that. Literally 3 times as much for the same kind of car with a higher level trim. The car companies have figured it out. This is what people want. Thus, we have product refreshes. Thus, we have many models. And Tesla doesn't. And of the models they have, the 3 and the X don't really sell much anymore. The S, the Y has gone to the gangbusters, and it's impressive as hell. The number 4 selling car in the world last year will probably be higher this year. You guys could tell me the numbers. I can't remember what they were. 760, 800,000 units sold in 22. Could be 1 million in 23. That's special. And as I mentioned to you guys, they're shaking the industry with their success and also with their profit margins. Now, that's been damaged in the first quarter, and we can talk about that. But when you have Volkswagen and Toyota both saying, "Oh man, these guys are scaring us," well, that's good job done by Tesla. This is the 2 biggest, baddest automakers in the world, and have been around for 85 years, and they've worked their way up to 10 and 12% global market share, which I know sounds like peanuts in a monopolistic world, but automaking is not monopolistic. We're not going to get there unless there's this transcending of the Cybertruck or the Model Y or the Model 2 or whatever you want to call the next gen mass market vehicle, where it can sell 3, 4, 5 million units. When the Toyota Corolla did 1.5 in 2019, and the F-150, 250, 350, 450 Raptor did maybe 1. If you get some car coming up that starts grabbing segments, like if you and I want to buy a car, Emmet, Matt, okay, hey, what do I want to spend on this car? Well, it's for me. I want to spend $60,000. Well, it's for my kid. I want to buy a used car for less than 20. Whatever it is, we kind of start with our number. What do you want? I want utility. I want a small car. I want to go fishing with this. I want to be able to haul sports equipment around and leave it in the back because it's going to be muddy. I want a nice car. I want to look cool, or I want a beater. Well, whatever. We have different aesthetics. We have different motivations, different utility requirements, and we have different budgets. And that's what defines this. And this is what the automakers were talking about for 50 years. right? In this class, here's the leader. In the mid-sized SUV, in the small economy, in the large luxury. There's all these different segments which have to do with price and aesthetics. And that's how we've worked. The question is Tesla going to make cars for all those segments? Or, and I think this is more likely if it's going to succeed, which I think is going to be difficult. But I think what they'd rather do is start taking and introducing cars that just pulled in from many different segments where people became less sensitive to those definitions.
Drew, I want to touch on that for a second. And then I want Matt, if he has any comment on the Inflation Reduction Act credits and how much that might have impacted gross margins. Maybe if you have a comment on that, Matt, in a second. But first, Drew, on the pricing and the segments, would you say it's yes or no? Do you think more than 50% of America realize that Teslas are not only $100,000 cars?
Yeah, we have to talk about this, Emmett, because I know you've been going on with that. Let's advertise.
Let's just, I think we need to get the word out that Tesla's.
I get it. But gosh, I got to tell you, bud, I'm not sure I completely agree with you. Is Tesla not the most well-known, most mentioned automaker in the world every single day? Are you guys not already getting just a ton of advertising and have been because of this
brand
issue I've run with the company?
The brand, I agree, is, but I had a guy on our channel just a couple weeks ago who drives a Tesla and is an Uber Lyft driver and has done 5,000 rides, 1,200 hours, or I don't know, some crazy amount of rides in his Tesla. And most of these people don't know. I asked him, like, what's the most common thing? He's like, the price. Most people don't know the price point of the Teslas. They think it's $100,000 car. And this is someone, you talk to people outside our bubbles, they might have heard the name Tesla, of course, but they don't know that it's a $50,000 and under car these days with the Model 3 and the Model Y.
The S Plaid is a $100,000 car.
Yeah, that's all they know, but they don't know that the 3 and the Y are. They used to think the 3 and the Y were $60,000, $70,000 cars, maybe even, or $100,000.
Now with the discounts and also with the incentives that depending on which country you're in, it's compelling.
I mean, theoretically, if half the country was not aware of that, and then you were able to somehow get that half of the country to be aware of that, wouldn't that almost like double the demand at the current prices in a way? Like if half the country didn't know that Teslas were, $40,000 or $50,000, the nice one.
Emmett, you might be right, but I think that car buyers know how much Teslas cost. I don't think that it's not in the conversation anymore. I think I'm trying to convince my wife. Actually,
savvy ones do, but some that just go to a dealer, I don't think they will know.
My wife to buy an 11. Oh, sorry, not 11.
Yeah,
a Model Y. She's like, no, that's not big enough. It's okay, honey. Well, maybe we'll get my buddy, which is what I also love about the Tesla car story is I have friends on both sides of the political spectrum. I've got left-leaning woke types and I've got right-leaning Trump voters, and they love their Teslas no matter who they are. This is a car that people that own it just like this. I can't believe it. And I've got a buddy down here that's bought a new S Plaid. I mean, I think he says it's 0 to 60 in 1.9. My wife won't drive it. She won't even get in it. I can't. It's too fast. But the bottom line is people like these cars, and I think people know about them. And you could be right, Emmett. You and Gary could be right that it's just a matter of Tesla putting an advertisement out like normal car companies. I think everyone already knows that. I think everybody knows about Tesla, and it's, if anything, it's the first car company that comes to people's minds. And if you're in the market for a car, you're going to consider it already, especially if you're in the market for an EV, which is a whole nother question. At what point will people want more EVs than they do IC? And I think that's the bigger question, by the way. I think that's part of the reason why we've seen a bunch of price cuts. People don't want as many EVs as Tesla fans would like to believe yet.
Yeah, this is going to be an interesting point where, thankfully Elon just agreed at the shareholder meeting a couple of weeks ago to actually do some advertising, which is Well, we've been essentially
know, you
asking
guys
for
were
like a
happy.
year. We're
You guys
Emmett and I have our
won.
tapping shoes on now.
Exactly. You guys won. You guys won
So
the battle.
So we'll certainly see. I mean,
Yeah.
we definitely believe that there's just misconceptions, and the vast majority of the general public has range anxiety, is not aware of the supercharging experience, is not aware of how convenient it is to charge at your home, is not aware of the safety. All these kind of basic things that are just different about the EV ownership experience. It's a little bit of a technological hurdle to get some people through, and talking to a lot of people in my friends and family circle.
Then do it, and you spend $100 million or whatever. It's peanuts compared to other things that Tesla could spend money on. It's just almost A/B tested.
It's peanuts compared to a 10% price cut too, in terms of what that does to profitability, which is kind of where I wanted to steer the conversation to next year. I mean, one of the main points in our previous conversation, and I've heard you say it again recently, is the car business is really, it doesn't really matter whether it's an EV or an ICE car. It's really about manufacturing profitability, or the manufacturing expertise that these companies have. But I'm curious, now that we have Ford breaking out their EV business separately at minus 100% gross margins. Rivian's still there at minus 100% gross margins. Admittedly, that's improved from where they were. I guess actually now they're in their latest quarter, they're around minus 80. So they've made some great progress from minus 500 where they were they started out. But I mean, still minus 80 to get to plus 10, let's say, is a long way to go.
Matt. I do have an issue with, especially like when people look at Ford. Look, they're losing $1 million per vehicle. They suck. It could be true, right? It could be that these traditional automakers or the new ones, the Rivians, the Luces of the world, never make enough or any cars that people want, and they don't take off, and it's because of lack of demand. I just think they're all at earlier stages. I think they're at a stage in their development where Tesla was 10 years ago. If you're spending billions on CapEx and R&D and you make 5 cars, well, of course you're losing a ton of money per car. You can't really do that analysis or think that's going to perpetuate forever until you get to some sort of scale, making 500,000 cars or 1 million cars. Now, maybe there's not the demand for them. Maybe people will not want 1 million Mach-E's or F-150 Lightnings. In which case that's a problem. But once they ramp their volume, then talk to me about profit per vehicle, especially after all the investing that is needed to happen as Volkswagen and Mercedes and Ford are in what I would call catch-up mode to Tesla. Tesla didn't look very good the first 8, 9, 10 years either on a profit per vehicle basis.
That is true, but my pushback to that is, like, if you look at the earliest data we have, which is when the Model S was ramping in 2012, and I've done this, I've gone back and looked at the numbers. Their gross margin when at the early stages of the ramp was like in the minus 15 to 20% range, and in a matter of quarters they were able to flip that to positive 5, positive 10, positive 15, and to where they got last year when they finally hit scale there at like 30%, and now that's admittedly shrunk down to say the 20% range, which is maybe more realistic. But like going from minus 20 to positive 20 was excruciating for Tesla. But so I don't know how a Rivian or a Ford goes from minus 100 or minus 500 in Rivian's case to like positive 10, positive 20.
I don't know much about Rivian, but I think for Ford and those guys, they're in the middle of the migration, and there's a tiny amount of units they're selling. Maybe that's because they're not making them good enough yet, or maybe that's because people don't want them yet. But and I still do have this assumption that by 2030, 49% of cars will be electric. By 2035, 75% of them produced will be electric fully. Whether that's government-led or consumer demand-led or some combination of both. They're going to have to ramp up. If they don't, and if it's a product issue, then Tesla can win. But if they, as I expect, treat this more of something where as they learn as they go, and by some year, people are calling cars that aren't electric, they're calling them ICE cars, and everything else is a car. That should be 2035. If 75% of all cars are BEV, you're not going to call them electric anymore. You're going to call them cars. And if you still are selling something that takes diesel or gasoline, that'll be called an ICE. We'll have some switch. Right now it's, hey, do you have a car? You have an EV. And that's going to switch in 2032. Do you have a car or do you have an ICE? And the question is, what kind of share will these traditionally pretty impressive companies, Toyota, Volkswagen, Mercedes, what kind of share will they have? Or will they surrender it all to Tesla? And will we see this paradigm shift as the sort of handset analogy Tesla fans want to believe that Nokia and BlackBerry will disappear, that Ford and Mercedes will disappear, and Tesla takes over? I don't see that.
So, I mean, I certainly understand that point of view. You know, the pushback that comes to mind when I'm thinking about that, though, is, you know, the technological advantages that Tesla has are so significant. I mean, when you look at the range that they're able to get out of a given, you know, kilowatt hour quantity of their batteries is significantly better than any of their peers. And so, you know, when any of these other companies are trying to compete on, you know, specs, they lose. So they have to cram more batteries, which makes it both more expensive and less performant.
Sure. This is a question of time to me. By the way, I think that all those traditional manufacturers make a lot better ICEs than Tesla would if Tesla started making ICEs.
Sure, but is that a relevant point or not?
Sure, because they've been doing it forever, getting better and better. And by the way, it was Toyota since the 70s introducing this and that, lean manufacturing, Six Sigma, supply chain optimization, and the whole rest of the industry copying them later. And I expect they will not give up without a fight. I expect they will come up with whatever cars people want. And I don't know. I mean, if you look at the number of EVs released by year since 2018 and how that's growing, we look at what people are saying they'll be doing in the next few years. There's clearly, in my mind, and I've been watching the industry for a while too, a change in tenor, an acceptance decision. We need to do this. I mean, every one of my traditional manufacturers is going to have, you know, they're going to either keep 20 minutes of a Q&A on electric or EV or batteries, or they might even have special days during capital markets days to discuss this approach. It's become a thing for everyone to focus on now. And that means they spend a lot of CapEx and R&D, a lot more than Tesla does, like by a factor of 10 on EV and batteries combined. And so of course there's a lot of costs coming through. They're not selling any cars yet, so the profit per vehicle is terrible. So he's, oh, look how much money they're losing on EVs. That will change, obviously, if they start getting share.
Yeah, I mean, sticking with that analogy though of Toyota coming in with, you know, Six Sigma and the Toyota production system, all the US OEMs who tried to copy them, you know, and the Europeans too, they copied them and implemented some of it, but they never quite got it right. And so I think that's why you see even today, at least in the US, you know, the Fords and GMs of the world, they've just said, we can't make money on small cars. So Ford's going to focus on trucks. GM focuses on like large SUVs, and that's where the majority of their profits are. So they never really did catch up to Toyota, I would argue. And so if the same thing is playing out, but across the entire product portfolio of EVs, so like large trucks and small, you know, fuel efficient EVs or like cars, then how are any of those incumbents going to really compete when Tesla has, you know, a 5 to 10 year lead? I mean, to me, it's a much more tricky thing when you don't have that escape platform. Like GM's trying to do this right now. We're going to only sell like Hummers and these like giant Escalades, like EVs. Like, well, I mean, is that enough to sustain the business?
Okay, so a lot of things going on here, Matt. Again, these are just my views too. I could be completely wrong, but to your point, what you're talking about is anyone going to be able to catch up to Tesla from a cost perspective and producing what it produces? And my point, which is going to sound sacrilegious to the pure technology guys, is that doesn't matter. Tesla might always be the cheapest, because they've got Elon Musk and a bunch of smartest guys in the world doing things. I don't want to not give credit to the engineers at Volkswagen. They're a bunch of smart guys too, at Mercedes, at GM, wherever. It's not like these folks aren't able to get costs down. But to your Toyota point, yeah, you're right. They were not copied as well as others, by others, as they might have hoped, or that others might have hoped. They still haven't been, Matt. Toyota still generates 300 basis points more net margin than anybody else because they're so good at making cars.
Except for Tesla. Tesla actually has leapfrogged them, which is kind of crazy.
Until the first quarter, right? So we'll see what happens with these price cuts. Was the reason why Tesla was so profitable, was it this perfect storm of latent customer demand and chip availability and all this stuff, which made it possible for them to sell cars at big prices, thus big gross margins? I don't know. We're going to find out this year. We're going to see what happens in the second quarter. I want to talk about the first quarter gross margins, and I know there's a lot of other stuff we want to talk about, but on that specific point, just because people weren't selling as many, making cars as cheaply as Toyota has been for the last 85 years, Matt, doesn't mean Toyota went to 80% market share. This is not a monopoly business. Toyota went to 12, making cars cheaper and more efficiently than everybody else. And everyone else trying to copy, and in some ways succeeding partially, but trying to copy their production methods and streamline and have more optimized supply chains, which is, by the way, it's the nature of competition in automaking. And I think I told you this analogy before. I'll see these Tesla fans saying, hey, look, Tesla's just a Model T of automaking. And I'm like, you guys better hope not. They had 50% market share in 1921. And then Alfred Sloan at Chevrolet decided to copy their technology with the assembly line, as did others. And Ford, world famous Henry Ford with the assembly line, went from 50% global market share to less than 10 in 6 years. People compete in this industry. It's tough. And the fact that as you say, and I'd have to double check this to make sure it's true. I'm sure others have better margins. I'm sure that Porsche and Ferrari have better margins than Toyota, but for mass market producers,
Go ahead.
Yeah, let's say for mass market producers, Matt, to not reach Toyota's level is, well, it means Toyota knows what they're doing and they're always a step ahead, but it also didn't translate to monopolistic market share. Just because Toyota was cheapest doesn't mean it's going to have 40 or 50% market share. It has 12. Volkswagen has 10. Toyota has margins which are a couple hundred basis points better than the next guy, but it's not crazy.
And I was just going to push back on your specifics that, Tesla was ahead of Toyota until Q1. I was just doing the math while you were talking there. In Q1, Toyota had a net margin of 6.8%. Tesla had 15.4, so more than double. And
yeah, you're including the credit. You're including all the credits.
Yeah, including all the credits. But even if you strip those, I mean, those were like 500 million. You strip those out, they've still got it.
Yeah, you do. If we are going to succeed in this energy transition, everyone's going to have to make cars, and no one is going to need Tesla's credits anymore. Sure, they look great now, and it's great to get $500 million here or there. But when we do like long-term valuations, are we going to really assume that there's going to be billions of inflows in 2035 coming to Tesla when everyone else is making cars too and don't need the credits? Don't know.
No, but I mean, I do want to point out though, and those are small. I forget the exact number. I don't have the figure in front of me. It was somewhere in the neighborhood of 500 or 600 million of credit income compared to over 12 billion of net income. So it's sorry, I think that was on the trailing basis. So you do have to strip those out. I'll give you credit for that, but it's even if you do strip those out, I believe that the math is still that Tesla had better margins than Toyota. So, but I've been speaking for a long time, so I want to kick it back to.
Sorry, go ahead, guys.
Yeah. So, Drew, I just want to take a little, take on a little adventure with me to try to think in probabilistic terms for a little bit, and I'll ask you a couple Spitfire questions and probabilities. Okay. So
boy. Uh-oh.
I want to talk about the Musk option. You know, when you talk about options, I think you got to think in terms of probabilities. Okay. So you're famous. I think you've talked about, to me, the first time I heard the word the Musk option, it was from you. And you made a good point about that. You know, there's all these things encapsulated within the Musk option. I just want to break a few of them apart. So currently Tesla's in around half a trillion market cap with its current auto business. And, you know, it's sort of in between where it's either going to be wildly successful and go up more if they solve some of these Musk option things, or it might come back down further if they don't, right? Is that sort of your viewpoint in a nutshell right now? Is that kind of right?
So my viewpoint is unchanged in that I can do a decent job, I think, fundamentally trying to understand the auto business itself.
Okay.
Now I'm willing to concede that maybe the auto business changes.
Okay.
Here's what it would take for me to change my view of the number of units. And I told you guys, okay, they would have to do this many Ys, this many X's, this many CTs, blah, 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 blah. We get to 10, I'll change my mind. I'll be wrong.
Mm-hmm. Sure.
And I'd love to go through the gross margin miss they had in the first quarter, because I think it was really telling, and it kind of flipped on its head this whole argument that a lot of Tesla fans have had, that Tesla can sell any products at any price, and that it's not a sector where there's any competition. And clearly if Elon's cutting price, there's something going on. Why is he cutting price and then cutting again and cutting again?
Yeah.
Is it to get rid of inventory? And why on earth wasn't there more response to those price cuts? We were expecting growth anyway. We should have grown anyway. He cuts prices even more. We should have grown even more, but we didn't even grow what we initially hoped to grow. Big earnings downgrades because of the revenue downgrades. There was gross margin pressure. And
you were
the goal?
You were absolutely right on that. And, you know, the gross margins, I think, were 32% a year ago when we talked, and you were like, they're not going to stay here, I don't believe. And you were absolutely right. They're down to 18% Q1. We'll see where if that's the bottom, or if they, how quickly they come back.
Then you get these scary comments from, well, scary to me. I think it'd be scary to you, that he was making around the first quarter. I quote, Tesla's in a uniquely strong strategic position because we're the only ones making cars that we could technically sell for zero profit and then eventually yield tremendous economics in the future through autonomy. So is he just covering up? Is it just camouflage for the fact that they're not making money? Or is this part of a grand design where he really does believe that they are around the corner on FSD and that everyone's going to license it? So I'll give the product away for free and we'll just monetize it. And it does tie into some of his earlier statements. And you've seen, you saw the one I pulled from the previous year, where he has this discussion with a bunch of tech guys saying, hey, it's all about FSD.
So the first part of the Musk option is the Tesla FSD robotaxi. Elon clearly thinks it's like, Elon clearly thinks it's like 100% probability in the next couple of years being solved. I'm more at like 50% in the next couple of years it's being solved. What's your probability of the Tesla FSD robotaxi being solved in the next 3 or 4 years? What's your probability? What would you say if it get 0? 0. You don't even think like 5% or 10%?
But well, I think it's a twofold question of it. I think if you ask like FSD or level 5 being solved is the first question. And how far away are we from that? But that could be Waymo, right? That could be Baidu. That could be a lot of other guys who are.
Yeah, but Tesla has the scale of turning 500,000 or 1 million, 2 million cars on at once like that. Waymo, Baidu, they have to build cars one at a time with like partnerships with different car companies, Jaguar, whoever, and it's going to be expensive each one. So let's say Tesla solves it and the others also solve it.
I do think if one person solves it, Emmett, that will become the standard, maybe 2. I don't think that you're going to have 3 or 4 or 5 different versions of the software for people to use. It's going to be like this part of the business is iPhones and Androids.
So you're really, but you're really at 0%, you think, for Tesla solving it before others?
My question is, will we solve this by 2030? Like literally.
Well, let's say 2027, 2027.
I know Waymo has a bunch of folks out and taxis out in these different regions that the Tesla fans like to derogatorily claim that it's ring fenced or geo fenced. So that's not really, doesn't really count. And I think
I'm trying to nail you down on a percent by 2027, Drew. What's the probability? If you just had to guess,
Tesla or that anybody?
Tesla, that Tesla solves it with or without other people also solving it, but at least Tesla solving it by 2026, 2027. What's your probability?
Level 5?
Yeah, robo-taxi capable where they can go in certain cities and states without anyone in the car and do things, drive people, make deliveries and such.
I'm gonna say less than 20.
Okay. Okay. Now the next.
But-
Okay. Go
We
on.
also have to have it be allowed.
Okay.
There's a
Yeah.
lot of regulatory stuff that has to happen. I do think, and I think I said this in my post, that by 2040 or 2045, it'll be the other way around. It'll be.
Oh, come on. We can't even dream what's 2040, 24. It's gonna be, let's not talk about it. Okay.
We might be in a world where we're not allowed to drive.
Yeah, no, we will be for sure by then, I would say. But the other, so that's one Musk option. You think it's under 20, whether it's 10% or 20% somewhere, but it's not zero, but you think it's under 20. Now, the other Musk option.
It's under 20 that we discover it. It might not be Tesla.
But
It
you
might be
think,
Waymo.
Okay, but Tesla is part of that by
these-
2026,
these
2027.
These Chinese are doing all sorts of stuff. It could
Yeah,
be one of
no,
the
it's
Chinese.
true. Now, the other big part of the Musk option is this Optimus robot, which I'm sure you've heard about. You know, you've seen. What do you put that by 2030
I
being
have
a
no
consumer
idea.
product?
Dude,
By
I have
that, by
zero-
2030 being like consumer 0 or 5 or 10 or 20%. What do you think it's a consumer product of some degree by 2030? If you had to guess, just play with me here. Go on this adventure.
I'm playing. Is it 5?
5%? Okay.
Here's my, but
Okay.
your point about my Musk option, I think that's here. All I can do, guys, is I can say, here's what the auto business is worth.
Yeah.
Here's my estimate. And this is from an auto guy,
Okay.
someone that knows the industry. What's
So-
left? I'd look at the share price, look at the
Okay.
difference. That's what the market's paying for the Musk option.
Okay. So listen, those two main, there's
another
other parts of
one.
the Musk option.
Energy.
Energy. Let's not, we won't talk about that. I want to talk about the two
sure.
craziest things in
Mega
the Musk
packs. If
option.
we all have mega packs, that's a Musk option, isn't it? And
Yeah,
by
but
the
that's
way,
not.
he might come up with something else next year. Right? That's a Musk option.
Yeah.
Hey, I want to own it.
But let's focus on these. Yeah,
Okay.
we'll focus on these two
May-
for now because we're running out of time. And the most craziest things, dream things that are hard to fathom, I think. So FSD robotaxi Tesla solves. You're saying like 20% or under, and you've mentioned before. It's trillion. If they did solve it, it would be multi-trillion-dollar market cap warranted. Probably if Tesla was the one to solve it, let's say 2 trillion. So 20% of that would be 400 billion. Let's say, and let's say the Tesla bot. That if that was a real legitimate thing, consumer product that's massive success by 2030, that would be like I think the Tesla bulls say 10 trillion plus, but let's say for your sake, 5 trillion. So 5% of 5 trillion is what? Is 120, that's 500 billion, no, 250 billion. So 250 billion plus 400, 650 billion on top of, that's at least 250 billion on the Musk option itself. And right now we're trading below 600 billion. So don't you think that Tesla is very cheap considering those odds you just placed on those crazy options?
Well, in the second option, I wasn't saying that it would be Tesla getting there necessarily. We look at I know that some of the folks like Guidehouse are sort of treated as like a industry kind of group that's focused on the traditional manufacturers. But I look at Ars Tech and I look at others. They don't rank Tesla highest in autonomous. Baidu
but didn't you reference like Argo last year in our call, and other people do too, but they went out of business. A lot of these people are going out of business.
I know. I'm just saying that it's not a foregone conclusion that if we do discover level 5, that it'll be Tesla.
But Tesla will get there soon after, don't you think, if someone else discovers it first?
Emmett, about this, and you guys are going to love this shit because you're going to think I'm crazy. I don't want it.
You don't want the options.
I don't want it. I would not pay to have my car driven autonomously.
Oh, you don't want the.
I know the experience you have. You love it. I get it. You're awesome. But I don't think that we all necessarily want autonomous vehicles. In the Midwest, where Matt's going to start working down in Indianapolis, I'm not sure everyone wants to roll autonomous in the Midwest. Maybe. It's nice to have cruise control. Maybe it's nice to have a lane changing thing, or maybe something to park your car. But will it go to the full blown close your eyes?
It doesn't need to be everyone. It's just a spectrum of people. Maybe half the people. Who knows?
I just don't think it's going to be
market.
I don't think it's going to be as profitable as people think. I don't think. And if it gets to the point where we are so happy and comfortable with autonomous level 5 stuff, then it will become a robo-taxi world, which might sound nice for Tesla initially, until you realize that no one's going to buy any cars. If I live in the city, especially, and there's autonomous robotaxis, and I'm comfortable with autonomous. It's legal. Maybe it's even forced upon us. I'll just take a robotaxi. I'm not going to buy a car if I can't drive it. I want to drive a car. Maybe I'm a Gen X/boomer and I can't help it. My kids like driving too. I don't know. It's interesting to me. It's this assumption that all of a sudden, well, Elon will be able to get $15,000 a year for these cars because he's just going to slap this FSD into them. It's already pre-packaged Trojan horse kind of products.
But it doesn't have to be in everything. It's not an all or nothing thing, right? It's just a spectrum of people that will want to drive in the robo taxis, but are more cost effective. Just like a spectrum of people want to use Ubers instead of owning a car in a city, for example.
Yeah. Oh, I think that's great. That's a great argument for robo taxis. It's Uber's argument too. They want to get rid of the people driving them, and that was their initial model. I just think that in terms of this idea that all the guys that have purchased Model Ys or X's or S's or whatever's made next, Roadsters, CTs, Model 2s, what do you guys call the next gen mass market one? What's the term you guys use?
Gen 3, I think, is the one. And that's, I mean, to your comment about the Toyota production system before, like Tesla's really pushing forward with this whole new unboxing process. I'm not sure if you've had a chance to look at their shareholder day and some of the other stuff that they were talking about with that. I mean, that's really
because they didn't want to talk about anything of substance. They just talked about how lower their costs started, Matt. So yeah, I watched it all.
I've got to drop off, unfortunately, guys. I've got another meeting.
Come on,
Drew, I've really loved this. And
really, it's more important than this, man. Are you serious?
You know, I've got another job now, unfortunately.
It better be with my Hoosier folks. If it's with my Hoosier folks, it's okay.
It's with your Hoosier folks down there in Carmel. All the good Midwestern guys who aren't going to like driving these things. Meanwhile, I was down in Carmel like 2 weeks ago. Couldn't believe the number of Teslas that I saw down there. So I don't know. I think
Carmel's a hotbed. It's like it's a mini California in the middle of it's like it's the highest per capita income in all of the state of Indiana. What interests me before you go, this is going to be the fun one to watch, is when the Cybertruck is eventually launched, and I've got to think full production is not till 2024 now. He would have said something, but maybe.
Definitely not. Yeah, he's saying limited production this year.
When it's launched, I want to see what people are trading in for that. And I will tell you, my guess is it's not going to be me. I'm not trading in my Ram 1500 or my buddy's F-150 or my other buddy Silverado. I bet it's a lot of people that already drive Ys.
You know what, Matt, we'll see you later. You got to run, but Drew, just to carry on before we end things.
We'll keep going.
Yeah.
Bye, Matt. He's gone.
I put a tweet out last night because I was thinking about this, because I know you had brought that point up, and I know my following is all Tesla Twitter fans and all that, and so I took that with a grain of salt. But I said, how many of you are going to buy a Cybertruck or not? You know, given legitimately, and over half say yes, but they're all Tesla fans. But then I said, what will you, if you said yes, what will you trade in or give up to buy the Cybertruck?
Oh, I didn't see that. What they said?
Yeah, that's the second one. So 20% said another Tesla. 10% said a pickup truck, and 30% said another type of a car, and 40% said NAC results. So those are people that aren't going to do it. So of the people that answered,
so 30% said some other kind of thing. Well, that's
if you take the percentages and you skew them differently, because you have to take out the 40% that said NAC results.
Take out the one. So 10% of 60 is the pickup truck guy. So
yes, one out of 6 people pick up.
One out of 6 guys are going to train in a pickup truck. Okay.
1 out of 3 another Tesla.
That's probably
and then half of them another type of car.
Yeah. So that's what you need. You need an expansion of the segment.
Yep.
It's not EV buyers. It's not pickup truck buyers. It's, hey, there's this thing that's people are like, I like that, even though the price point is a little higher or a little lower than where I was. I want that.
Yeah. And you have to think, probably half the people who answered this already own a Tesla, or maybe not half, but a much bigger proportion.
Your followers, you mean like 75% of them already own a Tesla?
75% own the Tesla stock, but I would say I don't know if even half own a Tesla yet. That's what I would say. So maybe they do, but it is a higher percentage than the general public, I would say. But yeah, so
that'll be the fun thing to watch for me too. And that's, believe me, I try to be objective about it. I'll be the first one to say, nope, I was wrong. And I have said that about things with Tesla. I never would have said to me too. I mean, I wrote my first bearish piece was in January of 21. The stock's at 240 or 50. But did I acknowledge that mega casting was going to wake up Volkswagen? No. They've done some great things. These
Yeah.
engineers have done some smart things, and they've created some things which have scared the Toyotas and Volkswagens of the world into action. And I enjoy that part about what Elon does and what Tesla does. And it is amazing to me that you can come up with a Model Y and sell 700,000 units, fourth highest selling car in the world or in the US, whatever the number is. And it's probably going to grow this year. That's incredible. And the question is now, and this is my question always, is what is the difference between Tesla and #TSLA?
Yeah.
Do they
The
have to be
business
the
and the
same?
stock.
Business and the stock. And that's
Yeah.
the way I think about every single company we invest
You have
in.
to. Yeah.
Is it the business or is it the stock? And as Benjamin Graham, I think I've told you this quote before, said in 1934, security analysis, any security is cheap in one range and dear in another.
Mm-hmm.
Securities are just they're the outcome of the ebb and flow of psychology in the short term and of excitement or of despondence, whatever it is. Ultimately, the fundamentals are what's going to matter. So, which is why when I try to value Tesla, I try to say, okay, what kind of market share will EV have in 2030, 2035? What
Mhm.
kind of market share of EV will Tesla have? What kind of margins will they do? What kind of cash will they generate? What's that worth today? Let's use some discount rate. And then where's the share price? Share price right now is still higher than that value to me.
Mhm.
So that's the Musk option. That's
Mhm.
our Tesla bot. And that's our FSD. And that is a big, I don't know. I don't
Yeah.
know. I don't
Yeah.
know.
It's
But at
a
least
big, I don't know. It's a lot of uncertainty. It's very uncomfortable to try to put numbers on
It
that,
is.
right?
At least I can know what I'm paying for it. Like right now, the market's saying, okay, well, I'm not kidding. I mean, if I look
You
at it
can.
right now, my base case, and you guys are going to hate me for this.
No,
God,
I know.
wait.
It's like 100 billion or 200 billion or something like that. Yeah.
My base case for Tesla right now
Our
is
business.
the present value of the auto business, and then what's left, right? So if I say that my base case is that in 2035, Tesla is doing net margins, which are still 3% higher by then than Toyota.
Mhm.
And that EV shares are EV market share is 73.8% of all cars produced.
Okay.
And the Tesla shares of EVs are 9.5%. And I know
Okay.
Tesla fans will say, oh, it's going to be 20. But
So
let me
7
walk
million
you-
cars. Yeah. Something like that.
Yeah, 6.7. Tesla ASPs will be $58,000. Net margins will be 12. Again, 300 basis points higher than where Toyota is today. But it won't be growing much anymore. It will have achieved
Yeah.
greatness, right? So you don't pay a PEG ratio. Or if you did, you'd have to pay in the single digits, because now it's just growing like GDP plus. It's 12 years from now, and this is when everything has already gone EV. So that whole secular EVs becoming a bigger part of total is now waning. But they'll still pay a lot for Tesla.
Yeah.
It won't be the 2.9 times Stellantis gets now, or the 5 times that Mercedes gets.
No.
It'll probably still be 15, 20 times earnings,
Yes,
because
still
it's
be good.
Tesla.
Yeah.
You got to discount that. Okay,
Mhm.
I'm a holder of Tesla. I am 23 years old. God, I wish I were 23 years old. I am 23 years old. How much do I need to earn each year to own Tesla?
Yeah.
How much do I expect to make each year? It's not 5, probably 10. I got to discount that number at 10. And if I do that, Emmet, I bring it all back.
10% discount present value. Okay. Per year.
Tesla net margins 12%, exit multiple in 2035 of 15 times earnings. They're growing it, shares out a little bit. I've lowered it a lot because I know how much they've grown shares. I know there's some one-offs involved there, but if we slow that down to 2.5% per year, it's not much. But we know what the share count will be in 2035, if that's correct. That gets me to an auto. This is my base case, auto value per share of $43.
Wow.
Now, it's much higher in 2035, the actual share.
So 43 bucks, that's like 80 billion market cap right now, or something like that, right?
$43, Emmet, works out to present value of the auto value in business in billions is $145 billion. Because remember, they're gonna have more shares by then.
Okay, yeah. So 145 billion.
So I'm saying that the auto business is worth $145 billion, which is not terrible.
Okay.
But if the current share price implies a market cap of 644 billion, that means the market is already paying $500 billion for the Musk option.
Yeah.
If my base case is right. Now I've got a bullish case, I've got a hyper bullish case. And if you go to the hyper bullish case, the hyper bullish case is that EVs are 81% of all sales.
And this is 2035 again, or what year?
Yep.
Okay.
Yep. I know you don't want to talk about 2035,
Okay.
but
81%.
if 81% is EV and Tesla's 15% of those.
So the bullish is only 15% versus 9.5%. Is that what you're saying?
Yeah, dude, then it'd be crazy if you remember. I mean,
I would put the bullish like 25% or something. I don't know, like
no
something a little more
chance.
aggressive.
I mean, if you get 25% of anything, you guys are going to win.
Okay.
I mean,
But then that the bullish point is winning,
Toyota's
isn't
at
it?
12. Toyota's
Okay.
been fighting the fight for 85 years. They got to
Okay.
12.
Okay.
Volkswagen's been fighting.
All right. So,
both launched in 1937.
all right.
They're up to 10 and 12. All right. So I go to 15%, base 14 and a half. Tesla base is 57. Net margins are 20 versus Toyota at whatever, 9 today. Exit multiple of 20. Discount rate of just 9, not 10. I get to $200 per share. And then if I translate this over, that covers the cost of the share price. There's no Musk option.
Mm-hmm. That's my base case right there. That's about my base. That's about my bearish base case. Your bullish case. That's the difference, I guess. Yeah. Yeah.
Yeah. So
Yeah.
I guess, Emmett, what interests me, and people, I have friends of mine say, Drew, why do you, I love talking to you.
Yeah.
And I like talking to Matt, and Gary and I will trade messages about stuff, and he'll say, I completely disagree with you on this, but I really agree with you on that. And I'll say the same back to him. It's civil, it's cordial, it's learning. I love that.
Yeah.
But most of you guys aren't that way. And I'll just say it. I mean, there's some Tesla bulls with whom I enjoy having conversations. And they're in the spirit of learning. They're civil on both sides, but there are others, Emmett, and you've seen them.
I see them.
Tesla fans who are not thoughtful. They're borderline religious in their views, and I'm not talking docile Presbyterians here. I'm talking full Jim Jones, People's Temple, Kool-Aid drinking, lovers of the stock, of the man, of the company. And when you present reasonable evidence to these folks about anything, if it doesn't conform to their pre-existing bias, they will attempt to discredit you. They will insult you. I've seen them insult you and Gary, for Christ's sake.
Yeah, they do. Yeah, just for talking about advertising in the past, they would insult me like, well, how dare you talk? Elon didn't say advertising.
You've seen it.
Yeah.
So this gets me to the share price versus company thing, Emmett.
Yeah.
So to the extent to which these guys are making noise, the portion of the share ownership which is made up by them at the margin, all those things kind of matter to stock pickers like me. Historically, at least, when you had zealots pushing a stock or being a reasonable proportion of the marginal buyer, whether it was 1929 or 1999, you wanted to be on the other side of that. So now there are also zealots on the other side. There are Tesla-y people that will not take any bit of good news from Tesla and acknowledge it. I've seen that too. It's not as bad. Now maybe I'm biased because I'm leaning a bit toward the Tesla-y side of some of the argument. It does seem to be more fervent on the Tesla side. And as long as those are a reasonable portion of the people that are buying the stock, that are making noise about the stock, that own the stock, that are buying it on the margin, I'll tell you what, let me put it this way. Let me put it a better way. If those guys weren't around, and if those guys would acknowledge when I say, look, guys, gross margins are actually 17.6% because they took another 230 million of IRA credits that didn't even tell you about on the call. You had to dig through the 10Q to reach it. And if
Yeah.
all the Tesla guys said, no, Drew, that's a good point.
Yeah.
I'm lowering my expectations for gross margins because this business is not as insulated from price pressure as I thought. If that was the feedback I got from the guys that loved Tesla,
Yeah.
I wouldn't be short. No way, because because that would be awareness of what's actually going on. It's the ignorance, it's the refusal to process negative information, which makes me think that I should be looking for opportunities to short it,
Mhm.
because the rest of these guys are refusing to see the realities of this first quarter. Emmet, has been a great one. I mean,
Yeah.
cutting price, tremendous miss versus the fourth quarter call. Zach gave, they had already done the first round of price cuts, and he said, we'll be at 20%. Now, there was some question, did he mean the quarter or did he mean the full year?
Yeah.
But the immediate reaction to the Tesla bulls was, well, he means every quarter. I'm like, well, maybe he just means the whole year. Turns out they don't even get close. Now, is that because they lowered prices even more, or demand did not show up for some other reason? But they had to do that. I was really, I wish I hadn't seen this. I wish they had disclosed the IRA credit on the call to shareholders instead of making us dig for it and find it. It was very elusive. I don't know how you felt about it, but, and I don't know what partial even means. I mean, it could have been tiny, but I was thinking that IRA credit had to be a couple $100 million, which made a big, well, let me read you what I wrote in the,
Yeah.
let me read you what I wrote in this FT article. Not about the revenues. We talked about revenues in the miss. As smarter heads prevailed, some folks started focusing more on gross margin pressure. During full year earnings, Tesla CFO Zach Kirkhorn had stated clean automotive margins would fall after these price cuts, but they'd stay above 20. Most of the Tesla faithful, hashtag Tesla, took this guidance as gospel, but some wiser bulls, however, such as Emmet Peppers, the aforementioned right here man, and the Y equals AX to the B t-shirts.
Wright's law, why you think Volkswagen and Ford will eventually be profitable with EVs, which just makes sense. They're at such small volumes now. If they
They're
can
small,
keep doubling.
and I think Wright's law, I know that Kathy and the folks at ARC love citing this one. Wright's law initially was mostly a labor intensity argument, and Tesla's already really efficient. It doesn't get that operational benefit from the scale that will come to someone that's more labor inefficient. So I think Wright's law, believe it or not, counterintuitively, is a great thing for Volkswagen and Mercedes, not for Tesla. Tesla is already very efficient. It might have other things benefiting it, but Wright's is the wrong thing to ascribe to the future success of Tesla. But besides that, so I got to get you a new t-shirt.
Yeah, that's a good counterpoint.
I will say this, and you're going to crack up. I wanted to have fun with you and Matt today, and I bought a Tesla t-shirt and I was wearing it, and I'm a big guy. I'm literally 6'6", 290. And the biggest they had was like a single XL or whatever size it was. I bought the biggest they had. I looked like Chris Farley in the Saturday Night Live skit, and you would look like Patrick Swayze. So I just couldn't do it. I couldn't wear it. But for the next one, I'll try to find something larger.
Their shirts do run small. Tesla's shirt. Whenever I wear the Tesla shirts, I feel like a muscle man, and I'm like, man.
I put that thing on. It was my wife just cracked up. She's like, yeah, no, you can't wear that. Okay, what was I saying? So yeah, we're talking about the Tesla faithful, you guys, and blah blah blah. Some wiser bulls, Emmet and Gary, thought that 20% was a bit high, and sure enough, it wasn't pretty. Now we should remember that even before those discounts were announced, all of us, Tesla or Teslac, did expect growth in the first quarter revenues because Tesla's growing. The capacity's ramping up, the capabilities are growing. What was delivered instead of the 37% growth people expected before the price cuts was 24% growth. Basically, in my mind, working out to about a $2 billion revenue miss. Now, this to me was a shock. It should have been a shock to those people saying Tesla's going to grow 40 or 50% in perpetuity.
Yeah.
No matter what. But a healthy shock. But then and you didn't get the scale effects that a lot of folks had hoped for.
But you have
And
to
the
admit,
gross-
there's a lot of noise and all of this with inflation and commodities in the last year or
tons of noise.
so.
And by the way, you're seeing tons of bad numbers from everybody. So how much
Yeah.
of this is macro? How much of this is
Yeah.
EV saturation or Tesla saturation, or is none of it?
Yeah.
Is this all
hard to
macro?
know.
This is hard to know. So we'll get more data. We'll figure all this out. I'm open to, believe me, I'm as I
Sure.
told you, I'm no longer short. The way the stock started behaving, honestly, in the last few weeks, like, this doesn't make sense to me. I mean, going down to 160 or 150 after that gross margin miss made sense to me. And when
Yeah.
it starts creeping back higher, I'm like, no, I'm
Yeah.
out. But I'm not a buy and hold guy. We're more sensitive to things like
Yeah.
that. And so I was like, okay, I'm out. And maybe I'll be long again one day. I don't know,
Yeah.
but I'm going to be objective about it. And so I was disappointed from an Emmet Pepper's perspective to see that what they reported were gross margins. And once I backed out the regulatory credits, which I think Zach was doing when he gave the guidance, we're 18.3%, down from 29.7 a year before. Ooh, okay. But then there was the Inflation Reduction Act tax credits that definitely came in. They didn't say a thing about them on the call with us, Q&A.
Yeah.
But in the SEC report a week later, Tesla stated higher unit costs during the first quarter were, quote unquote, partially offset by manufacturing credits earned as part of the IRA. They didn't disclose what partially meant. And you've seen Gary, if it's 20% or is it 25 or is it 15 or is it, I've said if partial means 17.5% of the costs of the were sort of benefited by a little bit of credit from the IRA credit coming through that they didn't disclose. That means that margins didn't really drop, clean margins didn't really drop to 18.3, they dropped to 16.9. Okay, does that matter? Well, and this is the sort of the soundbite from the piece. So when you decompose the numbers, you take out the sort of IRA credits, you take out the reg credits, take out the lease stuff, just look at the clean profitability of selling a car. I estimate that the profit per vehicle dropped from around $15,000 per unit in the first quarter of 22 to just above $7,500 last quarter. In other words, here was a price cut of about 12.5%. We don't know what it was really, 15 overall across everything. I don't know.
No, the price cuts for the sticker price of the Model S or the Model 3 and the Y, that was like
everything,
20%. Yeah, that was like 15 or 20%
Depended.
across
It was
two.
5 to 20. Different things happening in Germany, different things happening in China.
Yeah, that's true. Okay.
And
Variable
range. And the cuts in the Y were not as heavy as they were in the 3 or the S.
Yeah.
The Y sells. So I don't. I just said
It was substantial, very substantial.
whatever it was. Gross profits dropped in half.
Yeah.
Per car from $15,000 to $7,500. So let's throw out this notion that Tesla can produce whatever it wants and make whatever margins it wants. It's all up to capacity. It's demand.
Yeah.
It's demand, it's demand, it's demand. And maybe you and Gary are right that getting a few well-placed Super Bowl ads out there will be enough.
They're a year too late on it. You're too late. They should have done that. They can do it now, but it takes time for it to resonate, to trigger curiosity amongst consumers that otherwise just didn't want to even think about buying a Tesla because they assumed it was a $100,000 car. It's going to take time, but they should have started a while ago. They should start it now.
Okay, we'll see. I think people already knew that there was an S and a Y and an X and a 3.
Well, me and you, it's hard for us to fathom because, what
I
I've
know.
discovered is when you talk outside our bubbles to regular people somewhere that's not in California or, just someone in the Midwest where you live, or where Matt lives, talk to someone that has nothing to do with Twitter or Tesla.
I wish I was still in the Midwest, buddy. I love Florida.
You're in Florida now, Florida, right?
I'm a Florida man now.
Sorry,
right?
sorry. So this, talk to someone in Florida that has nothing to do with Tesla or Twitter or finance, and you might be surprised how many people.
Dude, Naples, Florida's a bit like Carmel, Indiana. My buddy,
okay,
who's as redneck as you like, he's got an X and an S.
Yeah.
He knows the gamut, but you're right.
Yeah.
We'll see. We'll wait and see what advertising
We'll
does. And I think I agree with you in that it's peanuts compared to another 5% price cut.
Yeah, they should have always from the beginning. Yeah,
I didn't get the price cuts. I didn't get the price cuts to the extent, the veracity, the rapidity, the the weekly changes. I don't
Yeah.
get that I mean, there's
Yeah.
arguments that that's bad for, and I've heard some people say, I don't even know what my car's worth. What's the resale value? What's the residual value? And you things are moving up and down like crazy. It makes things tougher. But I
Yeah.
didn't get the comments about, or even making a point of making a point of needing to say, hey, we can sell these things for no profit and we'll make money later.
He's just so all in
Why
on the
did he
full
say
self-driving
that?
option. Yeah, he's so convinced. He said he's a pathological optimist in every interview. It's true about full self-driving. He's been way too optimistic. I still think it's going to happen, but he's been too optimistic all along, and he still continues to be that it's right around the corner. So he thinks he can sell these for $0 now, zero profit now, and then suddenly in in some overnight update in the not distant future, like in the coming quarters, it'll suddenly be worth, so much money.
Well, and that's fine, but then Emmett, it gets something that's very difficult for you and me to model.
Yes.
If he were to sell every car for no profit for the rest of his life, well, then the auto business is worth nothing, and everything is the Musk option.
Yeah.
And
Well, I
how
would
do
say
we
the
figure
majority of
that
the
one out?
current valuation is the Musk option of the
I think
things
it
that have
is.
not come to be.
I think it is. I think
Yeah,
it is right now.
I agree.
And
But it has always traded
I
that
also
way.
think you should-
Tesla, in
I
a
know.
way, historically, Tesla has always
Always.
had a valuation of
and I
some sort of
and,
Musk
and I
option.
think the Musk option should be worth something. The guy
Yeah.
is a polymathic genius. What's he
Yeah.
going to come up with next? What's he going to think about that makes sense?
Yeah. Yeah.
I don't know how he does it. I don't know how there's enough hours in the day, how someone can have that much bandwidth. And I'm not a hater.
Yeah.
I also, as I think I told you before, if I wanted to go down that path, like some Tesla folks have, that kind of ends the debate. Then we're just all ranting about a political view. We're not learning from each other. We're not having cordial civil discussions about the pros and cons of Tesla because someone is coming at it personally. It's very hard.
Yeah. It is hard.
Get places to find enlightenment, which is what the goal of a stock picker should be. Hey, how can I be wrong on this view? Not let me try to bash someone else over the head about what kind of idiot they're following. I don't think that's the way forward. Maybe it gets attention for folks on the bullish or bearish side when you start putting people down.
Yeah.
And maybe it's an engagement thing, but I'm not interested in that as much as I am actually at all. I'm interested in figuring out what the stock's really worth and can I make money being long or short this thing over the next 10 years? And I'm guessing the answer is yes to both. I mean, right. We'll see.
Yeah.
We'll see, Emmett. What else did we want to hit? Do we hit everything we wanted to hit?
I think we hit just about everything. We'll have to do this again. Maybe next year we'll do it. Yeah.
I know what I wanted to say. I did a tweet, Emmett.
Yeah.
I wish Matt were here. Which to me really nails the importance of Tesla expanding beyond this definition that we've had in automaking for 100 years about segments. Now, you talked earlier how the U.S. auto companies in particular have stopped making certain types of cars. Dude, they've stopped making cars generally. They make trucks and SUVs. I think Ford, outside of the Mustang, might not sell a car. I think GM, gosh, I've written this down somewhere. They make the Camaro and maybe one other car. Everything else is SUV or truck.
Yeah. Yeah.
I know that Stellantis, which was Fiat Chrysler, now Peugeot is different. It has some stuff it sells in Europe, but here Stellantis, FCA, stopped selling all cars except for muscle. The Challenger and the what's the other one? It's escaping me. The Charger.
Dodge Charger.
They make the Charger and the Challenger, and that's it. And a bunch of Rams and a bunch of Jeeps.
Yeah.
And a bunch of SUVs and some minivans. It's what people want. It's a secular thing in the US, at least. This whole thing to have a big car.
Yeah.
It's not spreading as rapidly elsewhere. It is in Canada, obviously. They'll buy trucks in South America. They buy some mid-sized trucks in Europe. We'll see what happens. But there's some secular things going on, and it interestingly not related to oil prices. A lot of people like to say, "Oh, look, when oil prices really when when they go higher, people can stop buying trucks, and when they go lower, people start buying more. And it turns out that that was the case, yes, in 20 years ago, but in the last 10, 15 years, this demand for SUVs and light trucks has gone here. Even if oil prices went to 140 bucks, back down to 40, up to 120, back down to 50, there was still this secular growth for SUVs and light trucks. So Emmet, last year, best-selling passenger cars in the world globally. The Toyota Corolla sold 1.1 million. That's down from 1.5 in 2019. The Toyota RAV4, the Ford F-Series, which is going to be mostly the 150, but also 250s, 350s, 450s, and Raptors. Your Tesla Model Y in fourth place, amazingly. Behind it, the Camry. Behind it, the Honda CR-V. Behind that, the Chevy Silverado. Behind that, the Hyundai Tucson, the Toyota Hilux, which I think is how you pronounce it, and then the Ram. Bunch of pickup trucks, bunch of SUVs. If I take those top 10 selling cars in the world last year, and I say they are all going to grow unit volumes by 3% a year, every single year until 2030, then those top 10 cars are going to sell 9 million units in 2030. That would be 10 cars selling 9 million units in 2030. All 10 of them would have to be Teslas for you to get to 9 million, let alone 10, let alone 20.
But what do you say to this? What do you say to Model Y growing production and this year and selling 40% more Model Ys than last year and being number one, leapfrogging, and then the next year growing 30% or something, so Model Y alone could be a 5 million unit car.
It has to be something that like takes segments from others. Like the Model Y has to get like half of the compact and luxury SUV segments. So whatever your price point is, people want a Y. And whether their budgets are $20,000 more, $20,000 less, they're going to find a way to buy the Y, and before you know it, it's selling 2 million, 2.5 million units. And I've written that in the
we should see I think there's people that track this, the most common trade-ins for the Model Y, but I think it might fit that narrative that you combine all those trade-ins that people are trading in or selling, giving up for the Model Y, it could easily get to 5 million a year.
Yeah, well, if it does, and I think I told you this, if Model Y gets to 5, you win.
Yeah.
And I think what I put in several articles is if there were, if I put two and a half or 3 Model Ys and 750 to 1 million CTs and resurrection of the 3 and the S to 750, reintroduce the Roadster, maybe even do it in a smart way by making it almost a trim of the 3, using the similar chassis, you can get better margins out of it. I got castrated for saying that. It's a good idea if they were able to do that, but people don't get. I mean, it's like Porsche. The Porsche Cayenne is the Volkswagen Touareg. It just sells for twice as much. Same car. Right? That's smart, right? That's selling. That's branding. Selling not just trims, but that's creating models out of a platform. That's back in the day. You remember when we were growing up as kids? So you had Oldsmobiles, you had Pontiacs, and you had and it was still the same GM key for each one of those cars. And they were all just different nameplates for the same chassis. It's not stupid. But for Tesla, if they could get out to those numbers, and then you have the introduction of the next gen mass market car, and that's going to be the game changer or not. If that thing could sell 2 million, 3 million units, and the others kind of, the Y keeps growing, and you can start to construct an argument that they might sell 10 million cars within 7 years, I'll change my mind.
I look forward to that day. I think it'll happen in the next couple of years.
I know you think it'll happen. I don't think it will. I'll watch out for it.
Okay.
The Corolla do 1.5 million units in 2019 when we sold tons of cars around the world. It's going to do 1.1 this year.
Yeah.
I think we had a year with the F-Series of Ford trucks get over 1 million globally. Maybe even 2 or 3 years, like 17, 18, 19, or 16, 17, 18. it's hard for me to imagine any car selling 2 or 3 million units itself. It's just,
Yeah.
and if
Yeah.
it does, though, that would tell me something else. That would tell me, oh, maybe this is different. Maybe this is.
Yeah. Well, the problem is by the time that happens, Tesla would probably be valued at like a 2 trillion market cap. And you're like, it's way too expensive still. Like this should be a 1 trillion market cap. You know, by that time you're ready to change your mind, Tesla will already have overrun its valuation.
It's back to our earlier point, Emmett.
Mhm.
For me, it comes down to me spending a lot of time, and I look at Tesla. I'm focused on European company. Yes, they have a big impact on Stellantis, and Mercedes, and Renault, and BMW, and so I care from that perspective. But I also just think it's fascinating. I think this is one of the most fascinating stories in the history of capitalism. As I said, I want to watch this. And I want to see what happens.
I love your open-mindedness about it. I try to stay open-minded too. I'm very biased. But you are, I would say, much more open-minded than I am, given the background you're coming from. Me, I have a big dog in a pony in the race with my Tesla holdings, so I'm very biased. I can't be. By that nature, I know I can't be quite as open-minded, but I try my hardest, and. But I love talking to you because you help me kind of see all the sides.
I think you're doing great with that. And I think your job and my job, if we're trying to make the world a better place, is just to encourage people to be objective about it. You encourage me, I encourage you.
Yeah.
And back to I'm a big behavioral finance guy, and we all will tend to look for information that supports a view we already had, especially if we've been successful doing what we've done. You have been.
Yeah.
You bought this stock in whatever, 2013, 14, it's gone crazy.
2010. Yeah.
Yeah. And others have too. And it's hard to I think it's harder to stay objective about that, because the lessons you've had is, hey, anytime the stock sold off, you wanted to buy it.
Yeah.
And that was the right thing to do. And you'd have guys saying, no, don't do that. You're crazy. And that was bad advice. And so you've been ingrained with 13 years of, well, maybe up to last year, when I told you to sell it. I was right about that. No, but I'm kidding.
No, you're right.
So just stay objective, and also from a portfolio perspective, I don't know how many of your guys are retail-y or what percentage of and they're getting older, right? If they bought the stock in 2013, they're 10 years older. Even if they bought it as a kid, now they're 30.
Yeah.
How much of your net worth do you want to have tied up in this thing? And maybe you're right, and he is going to take over the world of NFSD and then license it to everybody else, and it is going to be an iPhone story. I have trouble with that for reasons we've talked about before.
Yep.
But if that is going to happen, how much of your net worth needs to be tied up in that? It's a question for you too. How much of your fund needs to be tied up in that?
Yeah.
And what is in expectations? What is the value of the Musk option today? What's the value of the auto business? What are implicitly people paying for FSD or for the Tesla bot or for the mega packs? And it's tricky. The final thing we should conclude on is, I don't think Elon, thank God for you, he didn't say he was stepping away like he is at Twitter. Some people were trying to say that would be positive for the stock. Bullshit. If he steps away, the stock
takes a big hit. It takes a big hit temporarily. I think long term it could still be successful, like Steve Jobs when he left Apple. I think Tesla's in that position, but I think for the first, right away in the first month, it would drop, 50%, 30 to 50%. That's my guess.
Well, just when you look at back to the point about who owns the stock on the margin and who's most excited about it. If he's not there, if we're not there to.
He would stay there as like chief technologist and architect, product architect, but he wouldn't be technically CEO and title, but it would step.
Right. And he'd still own most of the shares too, right? So it'd still be his, but I just don't think that would be a good thing. I think you want him to be at the helm, thinking and strategizing and competing. And you don't want him stepping away. I'll get short. If he says I'm leaving, I'm getting short in a second. I'm just telling you ahead of time.
Yeah.
Because now if the stock's off 20% that first day, maybe I won't. But that's not the.
That's what I think would happen.
Yeah. So don't let him quit. And let's say, okay, here we go. Final. Last year, what day was that? That was on the 26th of May. It's already
Yep.
been a year. The share price closed that day at 235.68.
Yeah.
Now we had been talking a few weeks before that about things. So I'm not sure what had been happening to the share price. Today,
184.
184.43. We will talk in May of 2024, my man. And I'd like to see you before that anyway. You got
Yeah, for sure.
I got to get out there. I'm sure I'll be out there.
Yeah.
And we'll see where the stock is.
What's your prediction? 1 year from now, what do you predict? If the macro market, stabilizes and doesn't like capitulate again or anything, or
I think
interest rates.
that if the macro market doesn't implode, which is affecting everybody, I still think the stock goes lower.
Okay.
But Emmett, my caveat is that I didn't understand why the stock just went from 160 to 184. So who knows? What's it control? Is the option market? Is it other things happening? Is he making some progress on FSD that I really don't know about? And is he really about to do something with that changes the game?
Yeah.
Or will
the whole NASDAQ has kind of gone up, 8% or something in the last,
Well, look at
month
NVIDIA.
too.
I mean, NVIDIA just goes up. They had good numbers last night, but that stock just goes up every day. And if all of a sudden money's flowing into things that are like that,
Tesla will go up.
Tesla's going to go up because you can make an argument. There's an AI story in that too. He's making Tesla bots for goodness sakes.
Yeah.
So maybe a lot of this is just Musk option, because from the auto business, there was nothing justifying this stock to rally from that first quarter. That was pretty disappointing. They cut prices and no one really cared. And so we're going to see what happens to inventories.
It was sort of like sell the rumor, buy the news kind of thing. I feel like, instead of buy the rumor, sell the news, sort of the opposite.
Yeah, that could be right.
Yeah.
So it'll be interesting to see the quarter, how it plays out. And we'll have this, I'm sure we will chat as we do every month about something or other. But in terms of make sure we have an official powwow, let's do it again in a year.
Absolutely. And just the final thing we close off on is like the charity. Last year you picked, I think, JDRF. Do you have a different for type 1 diabetes?
No, it's the same one. My kid still has diabetes.
My
wife still has type 1 diabetes. So that's the one. That's my favorite.
Okay.
And I think they do a good job targeting solutions. And you've seen how frustrating it can be with some of the muscular dystrophy, for example. I remember being a kid at the Jerry Lewis telethons and going around town raising money, and they've been trying to raise money for MD for years. It doesn't seem to be solving things, but they are really getting places, JDRF and others, pre-diagnosing things, helping people to see if they're pre-diabetic,
so important,
learning stuff,
and
maybe change your diet, change your habits. And then to the extent that they'll one day be able to fix folks that are broken, that's not beyond possibility. So that's got to be, it's very personal, very selfish choice for my favorite. No,
that's selfish. It's important, and there's lots of good causes. Type 1 diabetes for sure, and early diagnosis is so important. And we look forward to making another $10,000 donation to them.
Oh, that's super generous. I appreciate it. And as a dad who's plugged into his Dexcom and gets rung every 2 hours when his son goes too high or too low, and I have to panic. It's something that's it's certainly a lot better than it was 20 years ago in terms of our ability to monitor this, and a lot of this is to do with research people are doing, like JDRF.
Yeah, absolutely. Good. All right, Drew. Well, it's been great chatting with you, and hopefully our viewers get something out of this. Your perspective is highly valued by me and Matt, and I think other sensible bulls. Though there's certainly there's certainly Uber bulls that are a little crazy, and we'll just ignore that noise. And
there's haters. There's haters who are over the top. I will really admit I really don't want to be. I think people Well, I've been called like by a few of your cohorts, like the reasonable bear. And I think I am bearish. You know, I am
Yeah.
bearish
Yeah.
of
A
the auto
reasonable
company.
skeptic, maybe. Yeah. I
More
would
to
say.
do with what the share price is doing, not the business I'm
Yeah.
impressed by.
Yeah.
I think that, I think I've stayed objective about it. I'm willing to be long or short the stock. But that's, I think, a position where you can continue to learn and teach. Not just teach and get on my bully pulpit and tell you why you're wrong, Emmett, but actually to learn from you. Well, Drew,
Mhm.
here's what I like about it. No, Emmett, that's a good point. Rather than just shutting down any disconfirming information, which a lot of Tesla and a lot of Tesla does.
Mhm.
And that's no path to enlightenment, is it? You got to
No,
open up.
that's right.
And this is such a polarizing CEO, a polarizing company, a polarizing share price,
Yeah.
that it's hard,
Yeah.
given what it's done, how volatile it is.
Yeah. It's
what the future
fascinating
looks like.
to both of us. I think we both find it fascinating. It's such a moment in history, perhaps the greatest stock story of all time. And we're in the midst of it now, and it's amazing.
Could be. Or
Yeah.
it also could be a big disaster, dude.
Well, the stock story, if it is a disaster, then it would still be one of the best stock stories of all time, is what I mean.
100%,
Yeah.
100%.
Yeah.
Either way,
Yeah.
if this
Either way,
becomes
we're in
the
the midst of
largest
the
company in
greatest
the world
stock
again,
story.
or it doesn't, what they've done since,
Yeah.
I don't know, certainly what's happened to the share price since 2018, 19, but staying alive and getting from A to B from 2010 to 2018 and
Yeah.
19, and then selling nearly 1 million Model Ys. I mean, that's
Yeah.
impressive stuff. Now,
2
share
million's
price
coming up.
reflecting.
Yeah. 2
That's
million
that's
Model
what
Y
that's what you
soon.
say, my man.
Next
And
year,
that would
2
be
million
it. That
Ys.
would be
Yeah.
it. 2 million. I mean, what 1 point? What was the Corolla? I think what was the Corolla 1.5 in its biggest year? I don't know what it was, but you sell 2 million units of anything. That's the most cars that have ever been sold of anything, for sure.
Next 2024, I think it happens for Model Y. Yeah.
That'd be. Now you do need that, and you do need the next gen selling 3 million, and you need
Yeah.
the Cybertruck selling 750, and you
Yeah.
need to get on that 4, 5, 6. I do have you selling 6.7 million vehicles in 2030.
I thought you said 2035.
Okay, 35. What do I say? What do I
Yeah.
say in 2030? Let me look. I'll
Yeah.
just tell you what I said before you. I know you got this to go.
Yeah.
Base case 2030 units. Tesla units. Oh no, dude. I have Tesla units at 6.5 in 2030.
Oh, okay.
I have them at 7.9 in 2035.
Oh, okay. Okay. Wow, it's a small growth from 2030 to 2035. You think that slows down dramatically then, huh?
Small growth to you, buddy. You're already like taking over the world in terms of EV being
Yeah.
well over 50% of volumes by the time you get to 2035. It's the secular tailwind will be lightening up. So I go from 29% growth. This is unit growth down to 16, down to 8, down to 5, down to 4, down to 3. And so by the time you get to 2034, 35, when it's pretty stable,
It's mature.
it's a GDP business again.
Yeah.
Now, he might have much more Musk options by then. Who knows what he's doing?
Yeah. Yeah.
But, and that's the hardest part with the stock. What do you
The
pay
Musk
for
option.
him? What do you pay for him? Having him on board.
Yep.
He's captured the world's attention. Everything he tweets. He says Dogecoin and the world goes crazy. He says anything, the world goes crazy. He's really got his finger on the pulse.
Yeah.
How to shape narrative. He affects things, I think, mostly for the positive. I didn't like the fact that they kind of hid the inflation adjustment impact on the first quarter. There's no reason to do that. Just be open.
Mhm.
But broadly, he's in a great position to shape the future. Maybe being too old, maybe being too Gen X or too steeped in the history. I've seen these automakers and I've studied them. I'm a student of capital markets. They've been fighting with each other for years. and
Yeah.
battling and competing and winning and losing share and then recovering share. And it's
Yeah.
all.
We didn't even get to China. We didn't even get to the China and Tesla's
I know.
competition there. That's the
I
biggest
know.
threat. We'll talk
Well,
about that
that's-
next time.
There's an argument BYD is the ones to worry about, right?
Yeah.
They're just they're selling stuff cheaper, evidently making stuff just as good, and the Chinese are pushing it. We didn't talk about how much of the Tesla's profitability is coming out of Shanghai. It's
Yeah.
excuse my French. I was almost cussed on your podcast. It's like 80% of the profitability is coming from one plant.
Huge. Yeah.
It's huge. And so
Yeah.
that's nervous. What happens if there's some crap between
Yeah.
China and Taiwan in the next 10 years? You're
Yeah.
buying your chips there, you're making your cars there, and oh, what?
That's the Musk put. What do you value on the Musk
Yeah,
put?
well, he's doing a smart thing by opening up in Mexico, and opening up in Indonesia potentially, wherever else he's going to go. That's smart. Gonna take capital, and need demand for the units. But right now, China it's paramount. It's not Austin. It's not Fremont. It's not Berlin. It's Shanghai.
Yeah.
It's crazy.
Yeah.
It's such a
Crazy.
big number. Yeah. Okay. Well, let's talk about BYD next. Let's see where BYD is next year. I mean, they're kicking butt.
Mhm.
And are they going to be? Are the Chinese? Okay. When I was 5 years old, my grandfather, who fought in World War II, would not have bought a Toyota or a Honda from anybody. Glorified golf carts is what he called it. And you get 25 years later, and everyone's wants to buy a Lexus or a Toyota or a Honda because they're just made great and they last forever. Are we going to be that way? Are Americans going to be that way about Chinese cars in 25 years?
I wonder.
I mean, is China going to do a Japan?
Yeah.
And we got to keep an eye on that because this BYD story, which I guess Warren Buffett figured out 2 years ago, is wild.
Hmm.
The amount of cars they're selling, the share they have in the EV space.
Yeah.
So,
BYD is a whole nother. I'd like to dive deeper into that for sure. So
yeah,
I'm gonna.
I don't know
find some-
anything about them. Yeah, we
I don't
gotta
know
find
too
some guys
much,
that know.
but there's some specialists out there. We'll dive into them. I think there's there's red flags and there's bullish. There's both sides to that. So I'd like to dive into that at some point. But Drew, great having you on, and we'll end the recording now. And hopefully people got something out of this. Thanks again.
All right, you too, Emma. Good to see you, buddy.